Hello, and welcome to the Cryptocurrency News Channel. Today we're going to talk about why these theories involving complete global reset or meltdown and then somehow cryptocurrency completely takes over are mostly wishful thinking. We're going to talk a little bit about reserve currencies, what the situation in China is, Japan's relationship, and other things. So let's actually talk about reserve currency. I think many people have the mistaken notion that the USD is the only reserve currency out there. And that's actually not true. It is the dominant reserve currency, but it is not the only one. It has a specialized place as the de facto reserve currency, or like the most dominant of all the reserves we have, but it's not the only one. It used to have a special status where with the Bretton Woods Agreement back in 1944, right before World War II ended, where the U.S. Dollar was agreed to be the reserve currency that was backed by gold. So you can just buy dollars instead of holding gold. That is no longer true and has not been true since 1971 when President Richard Nixon took us off the gold standard. So dollars have not been really backed by gold in almost 50 years. And in 1971, because of that, Bretton Woods fell apart, and that was the agreement that made the dollar the sole reserve currency. So now, since it's not actually backed by gold, it is no longer the sole reserve, and it doesn't work that way anymore. And that's actually why we have a floating exchange rate right now, because it's not really pegged to anything. There's a plethora of economic and political factors that determine USD value. They're very complex, and I can't really explain them in this video. I have to do a lot more research on that before I can do it. But we have a floating reserve, like a floating exchange rate, because it's no longer pegged to gold. And because gold doesn't peg it, it kind of lost its status as the sole reserve currency, and there are other currencies held in the foreign reserve. And when we talk about the global reserve, all we're really talking about is the global foreign reserve here and now. Before 71, it was just the dollars backed by gold, but after 71, it just became the global currency that's held in the foreign exchange reserves. That's what we talk about when we talk to exchange currency. Now, being the dominant global exchange currency has benefits as well as drawbacks. For instance, it does give us a lot of economic and political influence over the world. For two, it allows us to issue debt at a very low interest rate because we are the dominant reserve currency and a lot of people depend on us. But it also has drawbacks. For instance, we cannot devalue our currency that easily because when things start to go bad, people actually trust our currency more than other currencies. Yes, I know some Americans might find that hard to believe, but generally that's true, and that's why we can't really devalue our currency all that much, because there's a lot of people who actually want to buy U.S. debt. And because of that, once it actually starts devaluing, other people actually want to buy the debt at cheaper prices, which actually buoys it up. So it's actually harder for us than, say, another country to actually devalue our currency, which is unbeneficial to us in trade or in a trade war like we are in China right now. So there's both benefits and drawbacks. And also, being the dominant reserve currency means that people are buying your debt, so you're kind of issuing debt. So it kind of makes your country's debt actually increase because people want to buy your debt more than any other country's debt. So it does have a factor. It does play a factor in our debt increase. So that is kind of like the whole thing about reserve currencies, what they are, why after Bretton Woods collapsed in 1971, the USD wasn't the main reserve currency. And if you actually want to see global reserves, USD shares of global official reserves, you can see since 1973 or 1971, sorry, which is where Bretton Woods actually collapsed, we've gone all the way from around 85% of the global reserves to a low of 46% in 91, and we're around 62% right now. If you want to know the other currencies in the global reserve, you have dollars, which is 61.8, euros 20.2, Japanese yen, which is 5.2, which has actually gone up since 2014, UK pound sterling at 4.5, Chinese RMB at 1.95, Canadian dollar at 1.92. I bet you didn't know that wasn't there. Australian dollar at 1.7, Swiss franc at 0.15, and other at 2.45. So it's actually, the global reserve consists of a lot of currencies. It's just that the U.S. is the dominant one. Now I use basket in the community, a basket of currencies in the community when I said it in the community comments, some people got confused by that terminology. I guess I won't use basket here. It's just the actual global reserve consists of more than just the US dollar. The US dollar only actually consists of 61.8. And it doesn't really have like, it has a special status because of the dominant one, but it's not really any different than the others because it's not backed by anything either. It used to be backed by gold until 71, no longer. But does have a special status because it is the dominant reserve currency. And most, if not all, commodities are settled in it, but there is debt issued in euro, Japanese yen, and these other currencies. So it's not the only one, but it is the dominant one. So I think that's something that most people that actually don't know. And there is talks about the Chinese RMB replacing the US dollar eventually. That really can't happen right now. Yes, the Chinese economy is growing and strengthening a lot, but the thing is, like the Chinese RMB is actually kind of like a black box. No one really knows how much of it there is. The Chinese government keeps it very secretive to itself, and it does not allow the RMB to be freely traded on the market. The reason is, and I think every Chinese business person knows this, is that if it actually did, the Chinese RMB would hyperinflate like crazy. They've simply printed too much of it, and if you allowed like Chinese businessmen or common Chinese people to trade RMB for USD, almost every one of them would do it. I have a lot of connections in China, a lot of business people who do business in China, and they've all told me the same thing. They're like, if we were able to trade RMB for USD, we'd trade like 90% of it because there's just too much RMB out there. Like if you think the US government is overprinting, the RMB has been way, way more overprinted. So because it's a black box, it's not likely to really displace the US anytime soon. And also, if you actually go back to China like I do fairly often and actually visit, you'll realize that yes, you can see the glitzy parts of town, but if you get down to like the commoners, like the average person, they're still far behind the US. Just look at the USD per cap, like the GDP per capita. Yes, the Chinese GDP is slowly catching up to the American one, but remember they have like 5 times more people than we, or like 4 times more people. So the actual income per person is like a tenth or maybe like a sixth of what the US is. And China only has so much land and so much natural resources. And so you kind of hit a barrier there. The US, for how much land it has a lot of natural resources, and a lot of the American heartland is actually good for agriculture, whereas much of the Chinese territory is mountains and desert where you can't actually grow anything. And America has a lot more unexploited natural resources than China does. So China has certain caps for growth in the future. America does too, but a lot of the resources are untapped, and we actually do a lot better in sustaining our resources. Yes, we still are exploiting them in a way where it's not sustainable, but China is doing so in a lot worse way. And they're aware of that, which is why they want to expand. So that's kind of like the US China like RMB USD thing, and why RMB is not going to replace USD anytime soon, because we don't really know how much there is, and therefore people aren't going to trust in it as much. If you think the world does not trust the US, most of the developed world does not trust China a lot more than the US, regardless of what you see on the news and TV. So that is the whole spiel right there about the reserve currency, kind of like China RMB overtaking USD, why it's not going to happen. And now we're going to actually see, now that that's out of the way, we're going to see why like a reset, or basically getting rid of the dollar reserve currency or collapsing the dollar, is just not going to happen. Now there is one main way to collapse the dollar, and that's if the major holders of the dollar all sell off their reserves immediately, and that would collapse the dollar. But here's the thing, China and Japan are the 2 biggest holders of US debt, and they're really the only ones that have power to do so. Actually, if you guys don't know, most of the debt is actually held internally in the US by US people, and people have bonds and stuff. So there's not really that much of a risk of that running. But China has like over $1 trillion. I think Japan has like $500-600 billion of US debt. And if they all sold it all at once, that would collapse the US dollar and probably set off a global depression. But China and Japan are not going to do that because they're not stupid. Regardless of how much China doesn't like the US because of the trade war, China is dependent on the US more than we are dependent on China. China depends a lot on us for basically employment. China and Japan are both a lot more towards export economy than kind of like the US, which is kind of like a consumer-based economy. Like I've gone over, the average person in China only makes maybe a sixth or a seventh of what the average person in the US does. And trust me, housing costs in China in the cities is enormous. The cost to buy a house in China is like 30 or 40 years an average person's wage, if not more. Whereas the average house in the US is maybe 3 or 4 years an average person's wage, maybe 5, depends on how much you get paid. So they don't actually, most Chinese people don't have a lot of expendable income. Yes, you see all the rich Chinese people like Crazy Rich Asians on TV. That's not the average. The average people doesn't have that much expendable income. So they don't really have this consumer economy or people who can actually afford this luxuries. Yes, China is actually really trying to switch from an export-based economy to a consumer-based economy, but that's not going to happen overnight. It's not going to happen until the GDP per capita and the living conditions and the amount of expendable money people have slowly come up, and that doesn't happen overnight. It's taken them 30 years to get that far, and it'll take them at least another 20, 30 years, if not longer, to actually be somewhat parallel with the US in terms of quality of life. I don't know if it'll ever get there because China is just squeezed for land because of its population and how much arable land that China actually has. But it'll take them at least like 2 or 3 more decades, another generation, to be somewhat parallel with the US if that actually happens. Japan's kind of a different story. Like Japan has a lot of money, but they also produce a lot of stuff like high electronics, and they actually depend on exports as well. I don't really know how they can convert to even a more consumer economy. They're actually looking for other markets, but a lot of their markets, because of their geolocation, are actually in Asia. And Chinese people don't have as much money as American people, and the other Southeast Asian countries are even worse. So they can't afford to lose the U.S. market. If the dollar goes down, not only do their own reserves become nothing, but if America collapses and the Americans aren't demanding their products, then Americans aren't actually going to buy products from them, from these two countries. And so their economies are going to collapse as well. The thing that a lot of people, regardless of what CNN or CNBC says, China is actually more dependent on the States, and the States are actually dependent on China. The States are dependent on China for like low-cost manufacturing and low-cost goods. They can eventually move that manufacturing out of China. It'll take several years because you have factories there and infrastructure in China to do all this stuff. And if you want to move to like a lower wage country like Southeast Asia or Africa, it's going to take years to build up those factories and infrastructure. So you can't actually do that. So this trade war is hurting us as well. But in the long run, it will hurt them more because they won't have a way to actually fund their economy or keep people employed if you actually pluck all those out. Their own consumer economy is not nearly enough to absorb that, and they depend on the US for exports. Now, they can look for other markets as well, but the US is a gigantic market that's really, really hard, if not impossible to replace, in the short order of a few years. So China and Japan have a huge, huge incentive to actually not let the US dollar collapse, because especially China, they need more years for development. Xi Jinping's not stupid. He knows this. That's why he's kind of playing footsie with Donald Trump. If he really had the strength to actually not need the US, he'd just be like, screw it, I'm not talking with Trump at all. He can just fight his trade war all he wants. But he's actually in a very precarious position because if the Chinese economy goes down, the elements in his government will actually go against him, and his head is on the line because, in China, you don't vote the people out. The only way you can get the government out is via a coup. So he knows he's in a precarious position, and that's why he's trying every once in a while to negotiate. He also knows that he might be able to buy a couple of years until the next election, until the situation in chain improves, or this trade war stops or something. But generally, he's in a very precarious position because every business person, like every international businessman in China, knows that China can't really survive without the States right now in terms of their economic growth. It depends so much on exporting to us and selling to us that it would shut off a lot of the employment back in China if that were to happen. And their consumer economy is still decades away from really overtaking, if ever, the export economy to the United States. And that's why China and Japan's kind of in the same situation. I mean, technologically they're ahead and all that stuff, and their quality of life is pretty good, but they also export, think about Canon, Nikon, Sony, just for cameras, and all the other electronics. A lot of that stuff is actually designed, planned, or made in Japan, and their market is a lot smaller than ours. So the US, because it's such a big country with a really nice population, and a population with a lot of expendable cash, at least comparable to other countries, it's such a great market for both China and Japan, which hold most of our reserves. Plus, we also kind of defend Japan as well. So that's the reason those two countries even though they might say they hate us, they really can't afford for the dollar to actually crash, and they actually control most of the external debt that the U.S. has. So they're really not going to make the dollar crash because the yuan is also pegged to the dollar directly. Um, so that would really screw them as well. So they have a huge interest in not letting the US dollar collapse, and they have the economic foothold. And plus, the whole thing with this economic reset, it basically is brought up like every couple of years when things look to go bad, and then we have a small recession and then we recover. I remember like well back into the 80s and 90s and probably even before that, but I don't remember back in the 70s. I wasn't born in the 70s, but I can remember from like the earliest 90s, every couple of years it was always like the US dollar is collapsing, the global reset's going to happen, blah blah blah, and then it doesn't happen, and then like 2 or 3 years later, 3 or 4 years later, the whole cycle kind of repeats again. Now the thing is, will the dollar eventually lose dominant reserve currency status? If things, yes, it actually will, but it's not going to happen overnight like some of these people actually want it to, because somehow Bitcoin and XRP is going to magically become the reserve currency after that. That's actually not going to happen. The dollar will eventually lose its dominance in the world reserve currency market as other countries can come up. The only reason it got so much power after World War II was because every other country got bombed to hell or was destroyed during the World War II. And America, it was the only major power that really, aside from Pearl Harbor, that wasn't really attacked. And it actually helped World War II actually helped our economy a lot because it actually had generated a lot of demand for production in other countries. And since everyone else was bombed to crap that could have challenged us, we were like the sole survivor. We were like we were like supporting everyone, and everyone basically depended on us. That's how we got so much ahead. Starting in the 70s, that started to unravel. About 50 years ago, that actually started to unravel, and it's unraveled more and more because you can't really stay ahead of other developed countries forever as they started to recover from the war. Plus, being the unofficial world's police or the official world's police, whichever one you look at it, we have huge military expenditures that other countries don't. Like Japan and Germany, they don't have to really pay for much of a military because they're not allowed to have one because of the World War II treaty. But not having one means they can spend more money on other things, whereas we can't because we have a giant military that is actually out there doing whatever the hell they're doing all the time, right? So that's why the reset's actually quite unlikely because other countries have a huge strong interest in actually not letting the dollar collapse, but there will be a time when the dollar is less than 50% of the world reserves. There was actually like a few weeks, I remember back in early 1991, where the dollar was actually less than 50%. I only remember it because it was over the news quite a lot in that period of time. I was really young at that time, just came over to the States, but I do remember a little bit of it because it was a huge deal at the time. But now it's at 61.8%. Eventually, over the decades, it will actually decrease. And if you look at the US plus Euro, in terms of like percent of allocated reserves, it's actually gone down from about 86 to about 82 in the last 5 years. The USD honestly hasn't decreased all that much. And the euro, honestly, throughout the years really hasn't either. You're talking about a loss of 5 points over 5 years. And as you can see from this graph, it goes up and down, up and down. Overall, in the next couple of decades, I do expect it to go down. But this is going to be something that actually happens as they readjust over the next 20, 30 years. And it's going to happen very, very slowly. It's not going to happen immediately because there's none of these other currencies are really going to take over USD and Euro. And many of these countries, like I said, have a strong interest in actually not letting the dollar collapse, especially China and Japan. So that's why the reset's actually very unlikely. Also, even if the dollar just suddenly collapses for whatever reason, it's not cryptocurrencies that are going to take over. You have to remember back in Germany in 1929 when the whole thing just like collapses. People don't want dollars, they don't want your paper money, and they're not going to want digital currency that's basically minted out of thin air. They actually want solid goods. They want food. They want water. They want gold, silver, gold, silver, copper, things that can actually build other things. So, and even if your Bitcoin goes up to like $1 million, remember what happened in Germany. You can probably buy like a loaf of bread with 1 Bitcoin because people were basically having wheelbarrows full of money. to actually buy a loaf of bread. So your Bitcoin might be worth $10 million, but that $10 million may not even buy you a loaf of bread. There was a story in Germany at that time where the guy just like left a wheelbarrow full of cash, like, and then went to lunch. And then when he actually came back, someone had stolen the wheelbarrow but had dumped out all the cash because he didn't want the cash because it was worthless. So even if money hyperinflates and you go up to $10,000 per $10,000 per XRP or $1 million per Bitcoin, it wouldn't really matter because that money is not going to buy you anything, and you really wouldn't be rich. Plus, like I said, people aren't going to want fiat currency. They're not going to want digital currency either. They're going to want like solid objects you can build things with, gold, silver, copper, building materials, or they're going to want like food, water, things you can live on. Because in the end, you can't eat dollar bills and you can't eat Bitcoin, XRP, Tron, whatever the hell you actually carry. So that's another thing. Like, even if it does happen, cryptos won't really take over. Now, Mark Carney actually mentioned changing the reserve currency to be less reliant on USD from a digital currency, and he specifically said a Libra-like coin that's backed by central banks. That's obviously a stable coin backed by the central banks. It'll kind of be like this mix right here. It'll just be kind of like an average of this right here, but it won't be 61% dollar. It will be less and less. The mixture of the cryptocurrency will actually be much less than 61% dollar. It might actually reflect how much of the GDP the US has in comparison to the rest of the world. So it might be like 20, 30%, 35% US dollar. It'll still be, the largest part will still be US dollar, but it'll be much less dominant than 61.8%. And that spreads the risk out. So what the US does may not affect the world economy quite as much if they did that. Most of the indication that both the IMF and the bank and Mark Carney at the Bank of England, when they actually talk about a new world reserve currency, they've mentioned a stable coin that's actually supported by a basket of G20 countries or G20 central banks. That's probably going to be composed of their own digital or fiat currencies in the future. We know that many countries are making their own fiat currency. Russia is making one. China is going to debut theirs in November. Venezuela's already made one, although no one wants it. And other countries like Canada, they're really, really thinking about it. And I think most other countries will actually do it. If you think about China, that's the world's second largest economy. The US obviously hasn't jumped on board, but Russia is also a major world economy, and they've done it as well. So, and Venezuela, all these third world countries, they might actually do it. Although, like, those digital currencies are going to be much better than their fiat currencies because no one actually trusts in them. So that's actually why I've explained why the reset is mostly wishful thinking, because many of these countries actually have an interest in actually not letting the US dollar crash. And even if it does reset, you're going to want like tangible, solid things instead of digital or fiat currencies: gold, silver, copper, food, water, things like that in a major crash. Because like I said before, in that scenario, you can't eat Bitcoin, you can't eat XRP, you can't eat money, but you can build with gold, silver, copper, you can build with other building materials, and you can eat food and water, and that's what people are going to want. So I've explained kind of like what the reserve currency situation is. I've also explained why the dollar is not likely to collapse anytime soon. It will actually lose the prominence that it has now as other emerging countries actually catch up. And in time, they might actually replace it with a basket of currencies in a stable coin, kind of like the SDR is now. And even if they don't, the percentage of dollars as the reserve in the foreign exchange reserves will slowly come down as other countries come up for the world to actually de-risk, because the US isn't always going to have as much dominance as it is right now. Remember, the US only has dominance because of World War II and the time before World War II and World War I, where basically the Western countries went on a conquering colonial spree and basically screwed all the countries up. That's all gone now, so all the other countries are going to actually start to step up. And that's why the dollar, and probably the euro, well, maybe not the euro, because the euro doesn't really have that much of it, the dollar will eventually lose prominence. I mean, it'll still be one of the major currencies in the reserve, but it might not take the majority. But that is a change that will take over 20 or 30 years. Plus, this whole thing about, it's an inside job or whatever, and they're going to suddenly flip it as the world reserve, that's complete nonsense, because the IMF wouldn't do that, because very few people actually have Bitcoin or XRP or whatever comparatively in the population. So if they just plan to change it overnight, they're going to have a bunch of riots. and a bunch of people bearing torches will come to their house. So they're not going to be for that. They would actually transition very, very slowly over time to any kind of new reserve currency. And I do think like they eventually will get off USD, but not anytime soon, because it doesn't really make any sense at this. It doesn't really make any sense. They really can't replace it with anything right now. And there's a lot, and like I said, a lot of the big countries actually have an interest in propping USD up right now, and I think they will keep it for at least another 5-6 years, and then maybe they'll start trying to replace it with like central bank backed currencies in a stable coin, where it's like a basket of other currencies. But that's actually my explanation why this whole like BTC to $10 million or XRP to $10,000 based on a global reset is mostly wishful thinking. It has almost no chance of happening in the next few years. And like I said, people have been talking about global reset, massive economic meltdown for as long as I've been alive. And they kind of predict it every couple of years. And based on their track record, it's not really something I pay that much attention to anymore, because the first couple of times you say it, yeah, people pay attention, but then after like the 6th, 7th time you're wrong, it's like, yeah, sure, it could happen, but the chances are extremely low. So that is the video for today. Let me know what you think. And oh, by the way, predicting that the world economy won't melt down is not a negative view. I don't know where people think that's a negative view. So that is the video for today. Thank you. Follow me and subscribe and join my 2 daily streams. Thank you and have a nice day.